Welcome to another installment of Crossroads Real Estate. Today we're going to take a look at the real estate market in Wisconsin in June of 2023 and try to figure out exactly what's going on. Okay, this information that we're going to view today is brought to you by the WRA, Wisconsin Realtors Association. Being a member of the Wisconsin Realtors Association, we get market updates and we have all these charts and statistics and everything else and a whole bunch of graphs that I just look at that are confusing. It's a little difficult to actually see what's going on, and maybe it's a little hard for you to see this on the screen. So what I did is, let's start out with the June 2023 at a glance, and this is a basic write-up. We get the updates every single month of what the sales have been doing over the previous month. Okay, as the prime season for home sales approaches, very tight inventories have kept sales low and put strong upward pressure on prices. Obviously, a little bit of information we all already know. Existing home sales in June dropped 20.4% compared to their levels in June 2020, and the median price rose to $304,000 in June 2023, which represents an 8.6% increase over the past 12 months. This is the first time the statewide monthly median price has exceeded $300,000. Well, okay, we got this information, but realistically, what we need to do is really look at the information and statistics and figure out why. If we just take the information and look at the statistics, it's like, okay, what is that showing us? Well, basically, I have about a dozen buyers that I'm looking for homes for at the present time. So I'm getting search updates every single day from Appleton all the way down to the state line along, eastern Wisconsin is where I concentrate in. Well, what I've noticed is the majority of the updates I get every single day are south of Wisconsin, let's say the Racine, Kenosha area, and the majority of the homes there are selling in the $300,000 to $500,000 range. That's 3 bedrooms, 2 baths, 2-car garage. So it's kind of a focused search. I could widen it up, but when I look at that, I'm seeing a high number of homes in the upper $300,000 range on up into the $500,000 range is the majority of the homes there, and up into the $1 million range. Now, I don't want to get into too much speculation, but a couple of years back, Amazon put up a big distribution center there in Kenosha, Wisconsin, and that was joined about a year later by Foxtron that hired all kinds of executives and engineers and people from all over the world, and the housing prices just skyrocketed in that area. Builders flocked down there to build $500,000 homes. Why would they build a $350,000 home in Brookfield or Menominee Falls or just outside of Milwaukee when they could build the same home and sell it for $550,000 to these new people coming in to the area that really didn't know the market? Well, okay, so now these homes are being sold out. Does that mean Amazon, Foxtron are having issues laying off people? I really don't know. I didn't look into that. But that's something you can dig into on your own. But The point I'm making is when we look at the majority of the houses being sold are not the medium priced homes from, let's say, $150,000. They're in the upper scale homes that are in the $400,000 to $500,000. So of course that's going to affect the overall price when they take all of these homes sold in Wisconsin, throw them all in one big vat, come up with a number. Yeah, but it doesn't tell a story. I've been in real estate for 20 years. I've never seen a market like this, and I'm trying my hardest to try to pick apart these statistics and look at history to figure out why this is going on. Comparing the first half of 2023 with the first period of 2020, existing home sales fell 24.8% and a median price rose 7.7%. Now, when we're talking about a 7 or 8% increase in prices, that is a lot. The average home price over the last 16 years has increased about 5%. So when we're seeing 50% over that, which would be 7.5%, it's something we really need to take a look at, and maybe we got to talk to some of our state officials to see what can we actually do to help correct this situation. And I'm going to do a video later on. It's going to take a look at the crash in 2008. I was there. I was working. I was selling real estate. I saw it happen. So I'm going to do a video and probably a series of videos of what happened in 2008. And the first one is probably going to just take a look at what did the government do, federal government do, to correct the crash in 2008, and compare that to what is the government doing now that is evidently causing a crash in 2023. Okay, months of available supply slipped statewide with total listings down 21.4% over the past 12 months. I'm just going to hit the highlights here. What we've got is a 3.1 months of available supply in June. Normally, we have a 6-month supply. A 6-month supply is known as a balanced. It's neither a buyer's or a seller's market. It's a real estate market. But right now, with low inventory, it becomes, of course, a what? A seller's market. Okay, this signals an ongoing seller's advantage in the housing market. The tightening supply is a real problem for buyers, something we already know. So a lot of this information, we're aware of it, but the question is, why is this happening? Okay, March through May period, using an annual rate of between 5.9% and 6.9%, June saw a spike in which the annual appreciation rate rose to 8.6%. Okay, so basically, we're seeing price increases above normal. And what we're doing is seeing an increase in interest rates. And when you put the two together, buyers are looking at the highest prices on record and some of the highest interest rates they've seen in their lifetime, With the average 30-year fixed mortgage rate increasing from 5.52% in June 2020 to 6.7% in June 2023. Okay, this is over a 1-year period. It went up from 5.5 to 6.7. Now, come on, most of the home buyers in the market remember interest rates in the 3.5 range. And guess what? Higher rates also keep most potential sellers from listing their homes, since many homeowners have locked in very favorable rates over the past several years and are reluctant to buy another home at much higher rates. In other words, we're seeing a lot of homeowners use common sense. Hey, I got a 3.5% interest rate on my home loan now. Why would I sell and get a 7%? I mean, come on, that's doubling your interest rate, and that really increases your payments. So we've got this information, and realistically, this is only for, it's just taking a look and comparing June 2023 to June 2022. But what happens when we start comparing these statistics over a wider range of time? We've actually got a chart here that I copied off of the WRA that lists number of home sales from 2007 to 2023, so that gives us 16 years of statistics to look at. And we know the crash was in 2008, right? So the crash was in 2008, and we saw a decrease. We saw a decrease for 3 years, and then it started going up again. So we know the recovery does not take a whole lot of time to start kicking in when the government starts doing right moves. And we're going to take a look at exactly what the government did in 2008 to initiate a recovery on the real estate market. And we know the real estate market, what caused the crash was, what do they call, subprime loans. They were lending to people that really weren't qualified to get a loan. You know, like they didn't have a job. And I can tell you some stories. I'll record some videos and go over some stories of some things I actually saw back in 2008 working in real estate. And I actually started in 2007. So I had about a year underneath my belt when I got into 2008 and started seeing some things. And I am a real stickler for the law. There are no gray areas. You follow the law 100%. And when I started seeing these things cropping up of people trying to put deals together just to make a commission, I actually led the entire league. I probably led the entire state on cancellation, mutual releases, because things did not look right. So, anyway, we had you can easily see right here, we had a low of 44,111 sales in 2009. That was a year after the crash. And 2007, you know, you can see it had a pretty significant drop. I don't know, off the top of my head, 25, 50%, whatever. But here we built up to 2021 to a high of 91,510 units sold throughout the state of Wisconsin. Right? Right. Okay, common sense. That is double what we saw in 2009. All right? So when we hit the crash, hit an all-time low, and actually doubled sales, is that a good thing? That's a really great thing. The only thing is in 2021, I saw prices increase like you would not believe. One listing that I was selling comes to mind. I listed a nice, you know, it was a 1,100 square foot ranch in really good shape, and we had it on the market. Decided to put it on the market at $150,000, which was, you know, right about in the middle of the ballpark, actually in the higher end of the market price in that particular neighborhood at that particular time. Well, we started seeing, I thrive on multiple offers, and I keep multiple offers alive and just let buyers bid against one another. There's a trick to that. And I'll tell you right off the bat, less than 10% of agents actually serve the sellers to their fullest extent by dealing with multiple offers. Why that is? Well, I don't know. They're lazy. It takes a lot of coordination. It takes a lot of thought. You don't want to send the wrong offer to the wrong buyer, so obviously there's a system that you have to work out. And I'm gonna have another video on a system that all real estate agents should be using. Others use it, but they're few and far between. Anyway, in 2021, we basically doubled the all-time low of 2009. But then we saw a decrease in 2022, and it pretty much looks like we're going to see a decrease in 2023. Is this a type of correction? Is it good? Is it bad? Well, we're going to take a look at what are home prices doing. And I get, oh man, I mean, back in these days in 2021, I would get upwards of well over 100 listings a day, new listings. And I would see, all the time. There was just dozens of homes that every buyer, could see. Now it's like if you can go out and see one or two of them in a week, it's quite a different market today than it is. But we're going to take a look at if it's good or if it's bad. What I wanted to do is compare 2008, the low year, to 2023, and we'll just take a look at the month. And you can see there's about twice as many in 2023 as there was in 2008. And we've got at least 50% more listings, and we've got over 50% more. So you can see we've got a lot more listings in 2023 than we had in 2008. Well, it was pretty easy to survive the real estate market in 2008. But back in those days, it was driven by investors and people looking for deals. And there were a lot of deals to come by. I was working with a lot of HUD houses, a lot of foreclosures, a lot of other stuff. People were getting houses at rock bottom prices. Nothing wrong with that. It's a phase that the real estate industry went through. And then if we take a look at the best year, 2021, compared to 2023, we can see that we're off, we got 67% of sales. We're off like 30%, off like 30%, off like 25%, off almost 40%, off 23%. So we've got a significant drop in the amount of listings and amount of sales. Is that good or bad? It's bad for buyers. So let's take a look at another statistic. What information do we uncover when we look at the median price of homes from 2007 until 2023? Well, basically, let's just take a look at the obvious. The first figures. The median price of a home in 2007 was $162,950, which has raised up to $250,000 in January of 2023. But look at this. We went from a median price of $250,000. They added $50,000 in it in just 6 months. Now, how does that happen? Well, obviously, with the higher interest rates, you wouldn't expect to see anything like that, but yeah, we do. And, what does that mean for the average buyer? Well, they're paying more for a house, they're paying a higher interest rate. And I can tell you right now, we're beginning to see In July and August of 2023, we're beginning to see fewer and fewer buyers actually active in the market, which means prices are actually coming down. It's kind of a natural correction. Anything in any market prices itself so high that it prices itself out of competition, and here we've got we just went from basically 304,000 down to 300,000, a minor decrease in prices. Like I said, I look at a lot of all the new listings and everything in a pretty good portion of Wisconsin, and I am seeing prices dropping across the board. They're dropping in Milwaukee. They're dropping in Manitowoc. They're dropping in Sheboygan. They're dropping even in the Kenosha area and the Racine area. Fewer buyers are entering the market, so prices are just starting to come down a little bit. So, is that good or is that bad? Well, we gotta take a look at a lot more statistics, but in the next video, we're going to basically take a look at, let me go through a list of videos and we'll take a look at what I have on the agenda. Well, I compiled a short list of some of the things I want to cover, some of the subjects I want to cover in future videos. Number one is market updates. And this is market updates from boots on the street. So you'll be getting your information from someone that's been involved in real estate for 20 years, that has seen a lot of different market changes. And I got to be honest, this market I haven't seen. So we're kind of researching this and discovering these things together. Okay, I'm going to do a video on exactly what was done in the 2008 market crash that helped bring the real estate market back. Okay, I'm going to do a video on an investment scam. It's probably the biggest real estate investment scam ever to hit the market. Remember the guy that did the infomercials and he was on a yacht with two sexy looking women in bikinis, and he said that he would even finance you, teach you how to be an investor, and even finance you? Well, believe it or not, I was working with an attorney to sell a foreclosed property for a bank and got an offer, and I instantly could tell that it was a scam. So I told the seller, the attorney, this is a scam. He says, you know what, we're gonna take this thing through and see what happens. And he told me he wanted me to record every step-by-step process in detail. You know what? By the time we were through with that deal, it never did close. Did a cancellation mutual release, and the seller, being an attorney, decided to keep the earnest money to teach the buyer a lesson, and the buyer lost thousands of dollars. But what I did is I reversed engineered everything that happened in the process, and I wrote out the script that scammer used. You know what? They probably sell that script in the black, dark web, whatever you call it. Okay, then I'm going to take a look at something I've been seeing on both social media and in the real estate market. AI, is it good or bad? Artificial intelligence. Basically, I've been getting a whole lot of spam emails, that people want to sell me this artificial intelligence program they wrote up that is going to take over my advertising and increase my business tenfold. So, is it good? Is it bad? I've been seeing a whole lot of information on social media. Basically, right now, the majority of this artificial intelligence I am seeing right now is just a program that goes through that creates some sensationalized headline and has a link, and that link is ransomware. So, okay, so obviously the first thing they're using artificial intelligence for is scammers are buying it up, using it, and they should be pretty easy to spot. But we're going to go over some things like that. And, of course, adding to this video list, I've got written a number of articles on scams that they're using on basic emails, especially in real estate and everything else. So hit the like button, subscribe, keep up to date. We're going to cover a whole lot of useful information on Crossroads real estate.